What's up, guys? Welcome to the multidimensional trading video series. This is video number 4, or part 4, lesson number 4. We are going to get into it right now. So today what I would like to go over and talk about and explain is a very crucial topic, which is basically how the market moves. It's really how the market is structured. It happens over and over, just like pretty much any of the concepts that you're gonna learn on the multidimensional trading video series. They happen repetitively. These are things you can take your trades from consistently, repetitively, over and over. But this one right here is really basically how the market is structured, and it'll give you that grand idea of how the market behaves because of how it's actually structured physically. So it really can't do anything other than what liquidity allows, and by liquidity I mean just where buyers and sellers are willing to exchange the hands, right? Where people are willing to buy, that's where liquidity's at, or where people are willing to sell, that's where liquidity's at, right? But what we're going to talk about is where to enter on these trades. So we have what we call the break and retest, or break evens, right? So here we have a prime example on the Bitcoin chart. The break and retest is a term that I've heard various traders say. I didn't use the term break and retest at first, but I understand it now to be exactly how it is said. The way I explain this market structure event is break evens. So basically, when the chart or price breaks above a high, somebody's getting hurt. That's usually the people who went short here at this high. They thought they were going to get a double top here. They did not get a double top. Price broke through that level. It did not short there. It did not fall there. Everybody who tried to sell contracts there did not succeed. So price broke up, and then it finally came back down, basically a break and retest of that level, and then it takes off. Then we got the double bottom, basically it broke up and then retested again, and then we took off. So this is a break and retest, or what I like to say, break evens, because the way I explain break evens is like this. If everyone did go short here at this high and they wanted to try to sell contracts because they had a bearish thesis in their mind, that's what they thought, they all went short there. So some people are not going to put stops. A lot of us are not going to put losses on. I'm definitely guilty of not putting a stop loss on and letting it run, right? So imagine if you got in here short and you let it run. By the time it comes back down to you, you're finally back at zero, right? Here you're in the negative. Now you're finally back at zero here. Excuse me. And then that's what I would say, you're back at break even. And just like any of these traders who went short at this level, when it finally came back down, they were at break even. So what do they have to do to get out of those contracts? If they sold, the only way to get out of your shorting your contracts you sold, is to buy them back. So when price comes back down to their level at break even, for them to get out of their contracts for them to close their position, they have to buy the Bitcoin contracts back. So they all buy at the same time, and then price shoots up again. See that nice strong shoot up. Okay, finally comes back down. That level has been broken and retested. So the only thing it is now is just a floor. Now for us, we have multiple confluences that shows us that is the way. This is going to be the direction, because we have this long blue line. If you can see it, that is the 369-day EMA. Remember, we can use the 369-day EMA on multiple time frames, right? This chart is the 1 hour chart, but on multiple time frames, you're going to find the 369-day EMA very useful. Okay, it does not stop. This is a consistent calculation across all dimensions, across multiple time frames, and it's very helpful in guiding us as to which highs or which double bottoms are going to be support, or which highs are going to be resistance. Okay, as you can see, and the theory, it's easy to see. If everyone went short here, they they tried to get short at that high again, maybe for a double top. It didn't work. It broke through them, came back and retested. How do we use this information to benefit? How can we benefit from understanding how to read this chart? We understand the why, but how can we benefit, and how do we know how to take trades from these levels? So if it breaks up, we're getting in on the retest of the level. Okay, we're going to be having our contract sitting here waiting for it to come back down and fill us so we can buy. It comes back down and fill us so we can buy. Okay, that is how we take advantage of the break and retest, or break evens. That is how they are used. That is how we can enjoy a nice run and plenty gains, plenty of time to enjoy a nice run on any asset if we understand what we're looking at. Because we understand what happened to the people. Because what we're basically doing is we're thinking about it in a thoughtful manner, right? We're being mindful of who's in the market. We're being mindful of who got hurt, because that's where you're going to find pain points, and that's where you're going to find entries to get into good positions. Because who got hurt? The people who went short at this level. They all had to buy contracts. So guess what we're going to do? We're going to buy contracts right along with them. Okay? And the people who shorted again, thought it was coming down. It went up, it came back down. They have to buy contracts again. And the smart traders who are buying the break and retest, they're going to be buying right along with them. So now we have extra market participants pushing the market up. Okay, we have the people who went short, they have to buy their contracts back. We have the smart traders, the informed traders like you and myself, like the people who are watching these videos. We're all going to buy these contracts as well. So not only are we buying, the people who went short are also buying at these levels as well. So that's why we get these strong pushes up off of the break and retest, or break evens, as I like to call it. And this happens on the chart over and over and over again on pretty much every single time frame, whether it's the daily down to the 1 minute or the weekly. You're going to find these same setups on multiple time frames. It's just the larger the time frame, the longer you have to be in that move. The longer it goes up, the bigger the percentage gain, right? The bigger the gains, the larger the time frame. That's the only thing that changes right there. You go with a larger time frame and you catch that same setup, you're going to get a nice pump, or if it's the other way, a nice dump, right? But we have multiple confluences here, and that's the point. We break up, retested it, double bottom off of this level. Now it was a roof right here. Now it's a floor. Very easy to see. Okay, and we also have the 369-day EMA as our strong, very strong confluence to say, hey, you broke above the 369-day EMA, plus you have this clear market structure that got broke. That is strong support. That's a strong confluence for strong support. So we have extra confidence to take those buys. As simple as that. And then look at that. Run from 96 to 102. That's a 6K run on Bitcoin. That's very nice. Very nice. About 600%. 6K run on Bitcoin right there. If you're doing any type of leverage, that's beautiful. Okay, that is great. 6%, and I mean just on 5x. We'll say something small that's conservative, that's wise to do. That's 30% on capital, right? That's 30% return on investment on a small leverage like 5x. If you play with any type of leverage, right? The break and retest or break evens. We have these levels that get broken, and the people who tried to take sales there, they gotta buy those contracts back. That's the only way to get out of a sell. You gotta do the opposite and buy. And then we know we can take advantage of this by buying at the level. Okay, we understand that we have our 369-day EMA. We also have the level being retested. That's it. These people who shorted here, they're just happy to get their money back. They're break even. They're at zero. They'll be happy to buy those contracts back if it came back down to them. Now remember, this is the hourly, so it's even a stronger time frame. If you imagine you bought here, or I mean, try to sell here, try to short it here, and you had to wait hours and hours and hours for your money to come back down, or for the price to come back down to your entry point, so you can just get out and break even. You're gonna buy those contracts up so quick. Like the pain of waiting for hours and hours to finally get back to break even, especially if you're trading on leverage, you're gonna buy those contracts back up so quick because you're back at break even and you'll live to fight another day. So that's what other people are doing in the market. The market has to react that way, because remember, we're trading. Everyone's trading. They're people. They're humans. Okay, even if it was a robot, it doesn't matter. It still was commissioned by a human to get profit and manage loss. Okay, and it's gonna pretty much do the same thing. If it has the opportunity to get out at break even and volume is picking up, it's gonna get out. It's gonna buy those contracts back too. Robot or human, doesn't matter. So we'll go over to the next example for the break and retest. It's literally the same 369-day EMA. The chart is doing the same exact thing. I know you guys can see it before I even point it out. So right here on this 369-day EMA, you can see it nice and clean. Break evens, break and retest. Let's go ahead and take this trend line, smack it down right there. Look at that. Break up through the level, through the roof, that ceiling that was acting as a ceiling, acting as resistance. 369-day EMA as well. Right here, broke through it, broke through that roof, broke through that EMA, that exponential moving average, right? Broke through it, came back down and retested this level right at the 369-day EMA, plus the physical structure of the market right? We have the physical structure we can see objectively. Remember, we have to stay objective with every trade that we take. If we can see the objects, that's where we take our trades from. If we cannot see the objects, then we're not taking the trade. It's not worth our capital. It's not worth our time. It's as simple as that. If you just only take the trades from the objective points of view, from the objectives or the objects on the chart, then that's where the win rate is increased significantly. Taking losses drops dramatically. They will happen from time to time, but if you stick to that same exact strategy by only taking the trades from the objective points on the chart or objective points of the market, that's it. That's all there is to do, and it's just have to be done in a repetitive fashion, right? It's just frequency. How many times can you do it, right? Over and over and over and over again. Remember, it's practice, it's paper trade, it's do this repetitively, because that is how you'll see it work. If you do it 100 times, you can see for yourself, well, dang, 80%, 80 times out of 100, I won a trade. Maybe 20 times out of the 100, I lost a trade. Well, I mean, if you won 80 times, that's way more than the 20 times that you may have lost. Because this is a high win rate position to be in. These are high win rate, success rate positions to take, especially when you have the 369-day EMA plus the physical market structure being broken and retested. Because the idea is the same. People seeing this level as resistance. They try to take the short again. Everyone tries to sell contracts. It runs through them. Finally comes back down to them. Remember, they're break even. They are going to have to buy their contracts back to get out of their position. They all buy. You see that bullish order block? The smart traders, like myself, the people who are watching these videos, we're all buying here. We're buying here. The people who finally got their money back after shorting, they were wrong. They're buying their contracts here. We're all buying. Okay, and that's when the price gets pushed up, and there's really no reason for it to come back down. Because the people who were going to sell, they turn into buyers. The people who look for these objective trades, we're all buyers. The market, the majority of market participants are buyers, and that's pushing the price up. It's as simple as that. And it's even better when you get the buyers that they're willing to buy, but they're not buying to get into the position. These people who bought the contracts after it came back down to them, they're buying to get out of the position. So they're not even a drag on the price anymore, if that makes sense. They're not going to weigh down the price. They have no contracts to sell as the price goes up. They bought to get out. Okay, the small or smart or people who look at the chart objectively, that smaller group of people, we don't have enough weight to drag the price down. We're gonna ride that wave up very nice and easily because it's a thinner market up here. The higher we go, the thinner it is. Break and retest or break evens. It's as simple as that. Okay, I'm going to take you guys to one more example, and it's happening live right here on the 1 hour chart. I know you can already see it. It's clear as day, right? You guys see this nice fat green candle. Somebody's buying there. What did it run into? Well, bink, 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 bink. Look at that. Break and retest. Break evens. Objectively, you can see it. These are just objects on the chart. Price ran into something. It got stuck. Okay? This acted as a floor now. They got broke up. Price broke right through these highs. Okay, maybe people were bearish here. They're bearish in 97K. Too bad. No one cares. Price pushed all the way up and it dragged on for a nice long point of time. Finally came back down here. Whoever shorted here, they're finally back to square one. They're finally back to zero. So what will they do? They will gladly buy those contracts back because they sold, and the only way for them to get out of their position is to buy the contracts back. Simple as that. So they're buying. The people that are watching these videos, myself, we're buying here. Okay? The smart traders, we're buying here because we understand what happened to the last cohort of individuals, the last cohort of traders, whether it was institutions or family offices, doesn't matter whom it was. We understand the pain that they're going through, so we understand what they must do. Remember, markets move because they have to, not because they want to, right? I believe I learned that from Dr. Elder in his book, Trading for a Living. Markets move because they have to, not because they want to. They got to get out. They have to. So how are they going to get out? They have to buy it up. So we're going to be buying here. The people who shorted too early, they're going to be buying here. Break N Retest. Or, like I'm explaining the psychology of it with break evens, right? Because these people who shorted, they are finally back at zero. And I would save my capital. If that was me, I would also be getting out at my break-even point. The best thing to do though is to let it break and then get in on the retest. Get in get in with the market, get in with the flow of the market. That's the point. Alright guys, this has been video number 4, part 4. Video number 5 coming soon. Practice paper trade, do this repetitively. You guys will understand it. You can see it. Watch these videos multiple times. You will understand it. You will start to see this on every asset that you trade. It happens over and over. It does not stop. Okay, this is a continuous, perpetual printing machine. All you have to do is understand what you're looking at, and then printing is as easy as literally pressing the button or setting the order. Okay, remember, nothing I say in these videos are financial advice. I am not a financial advisor, but these are videos for educational purposes only, and you can use them and practice with them. Simple as that. I'll see you guys in the next video. Peace.